The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look at some charts today. We're going to start out with the DAX like we usually do. As you can see, we've had a nice little bump on the upside after the Gartley pattern. And if we take a look here at the FTSE, you're going to be able to see it right here. Yes, Marshall, it is Yom Kippur, the High Holy Days, the Day of Atonement. When I was at Drexel, we had 32 brokers in the office. There were 27 Jewish brokers and 5 Caucasians. Adora Chen was the only non-Jewish lady. There were 2 lady brokers, and then Adora was, of course, Chinese. And there was 20 myself, Ernie Mosley, and one other guy. I can't remember his name offhand, but this was a really slow time of the year, folks. This will be probably, I don't think it slows down much anymore like it used to, but the stock market used to be really slow, and the commodity markets were very slow, especially in Chicago. Whether that's going to mean anything or not, I'm not sure, but we've got a couple things to look at. Let's take a look at what we were watching yesterday with Apple. We want to keep this up just to show you how it follows these numbers. Now, remember, we were looking for a price objective on that big ABCD pattern to come in at 215, 214.50 actually, and we believe that is still valid. Yesterday, what happened? You can see we made a small ABCD correction. The market rallied up to about a 38% retracement of the high from September 13th. So this is still an outstanding target here in 214. The only way that this would be negated is if we get above the 228 level. So that's what we're keeping an eye on in Apple, just to see how the patterns work. So we'll see what's going on. We'll see. Anyway, yes, the Drexel was a great place to work, folks. Unfortunately, it went bankrupt in 92, 91, and but there were really nice people. They're very generous people, folks. They really tried to help folks. I mean, they really did. And so it was. In fact, is when you made money, you were expected to give some of your bonuses and stuff, you know, to back to the poor. And what they did was the executives at the Los Angeles part of Drexel, they had a really strong affinity to the penal system in the Los Angeles County area, and so they tried to help the prisoners, and they would try to do the ones they could do the best with. They worked a lot with the women's prisons and also the teenagers that got into trouble, but they did quite a bit. In fact, there were three rabbis that were stockbrokers in our office. You know, they worked as part-time rabbis, and so that was a pretty fun place to work. Of all the years I've done everything, folks, and gosh, I've been around the block a couple times here, but those years at Drexel, those 6.5 years were really special. I really. And I still don't remember a lot of it, but it was still a whole lot of fun for sure. And I still have some friends out of that group, and a few customers that still come by. In fact, when I do this show, every once in a while, someone will give me a call and say, "Hey, is that you?" You know, and it was. I still have those cougar hens that we bought in 1975, and that was back in 1976, 1977. Those were the good old days. Okay, let's get talking about some markets. We got a chance to make a couple of bucks today, possibly. Sometimes these patterns work, sometimes they don't. But let's take a look at the morning Joe. Look at coffee. You see the 3-drive pattern that we've been talking about. Look where we are now, boys and girls. Now remember, this is nothing more than a pattern that occurs occasionally. I mean, we've seen this a lot of times. We saw it in hogs, but if you'll notice that little red box down there at the bottom, and over to the left it says 1.618. That is the 1.618 expansion of the monthly range from the 20th of August to the 19th of September, and we hit that number which was 94.90 last night, and I don't know if it's going to hold or not, but you know, if it goes below that, you're wrong. That's pretty much it. We got another one coming in, and we got another one coming in here, and that's in one that is our largest crop in the United States. Oh, by the way, we're going to have Bill Meridian of Cycles Research as our guest today at the half-hour break. Always interesting and extremely smart fellow. Gives us a lot of great information. But let's take a look here at the Christmas corn. Here again, you're seeing a market that is making a this is a butterfly pattern. It is not a 3-drive. It's a butterfly pattern. That is different than the one in the coffee. The coffee is a 3-drive pattern, and the Dees corn is a Dees corn is a butterfly pattern. So let's keep in mind that that's what we're you know, Gator is saying that the largest crop might be pot, but I don't think so, Gator. I believe that corn is, because boy, if you ever been through the Midwest, I mean, you see nothing but cornfields as far as you can drive, whereas the marijuana stuff is a lot smaller crops, I think. But you know, I don't really know. I don't know if it's not or not. All I know is, you know, folks, I'll tell you how weird these markets are, if you want to consider weird. But someone asked me to take a look at the stock of TRLA, Tilray, I guess. And I wanted to bring it up just to show you the pattern that was here this morning. And you'll look at this, folks. We have a 3-drive pattern, a big gap up. Do you know this thing's going to open at 231? I mean, give me a break. That's a 50% run. I mean, in one day. Yesterday was 25%. Now, this isn't a bubble, of course. Anyway, the reason why I brought this up was twofold. One is to look when it was brought out in late July. You'll notice that it went up all the way to 36. It backed off. You'll see it backed off to a 78% retracement at $20 a share. And from that now, you're up 10 times in 2 months. That's got to be... That's back in the old days of the 1960s almost, or 2000, the old dot-com bubble pretty much. I don't know anything about that kind of stuff, but that's neither here nor there. But anyway, it's a lot of them are going crazy, and a lot of people coming in. And much of that stock, folks, I don't even know if you can actually sell it short, because probably there's not a lot of stock outstanding, and you still have to borrow the stock in order to sell it short, unless they change the rules on that, and I don't know if they did or not. That's why I don't really do the stocks, because it's a little, you know, it's so much easier to do the currencies. If you want to look at a currency today that is really ripe, let's just take a look here at this dollar yen. You talk about one that we've been watching. You can see here at this 1245 level, 112.45, we're completing a perfect ABCD pattern, and it's a 61% retracement off the high way back on August the 17th, and this is indeed a Gartley pattern. It's certainly, as you can see, the ABCD patterns intermixed through this, but I just wanted to bring this to your attention. This is sent to us by one of our friends across the pond. So let's take a break. 877-927-6648. We'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has just launched a Tiger Dollar sale for one weekend only. Through Tuesday, September 18th, you can get up to a 50% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN newsletter or service. TFNN has a new website launching in the coming weeks, and to celebrate, we're having a Tiger Dollar sale. For all the details and to get up to a 50% bonus on your Tiger Dollar purchase today, visit the front page of TFNN.com before this sale ends Tuesday.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're going to talk a little bit about the Russell 2000. You'll notice here, this is a first chart is from our good friend Mr. Z. And what he's doing is he's looking at the Elliott wave structure. As you can see, waves 3, 4, and 5. And now what we're going to do is we're going to take a look at it by just looking at some patterns and seeing the ratios. You'll notice yesterday it had a very, very meager rally when we had that 250-point rally in the Dow Jones. The Russell couldn't even make a 50% retracement of the previous day's range. To me, that would sound like it would be rather bearish, but you know, God only knows, and as I mentioned many times, she does not trade. So keep an eye on that. We also had the same thing happen in the NASDAQ. The NASDAQ only rallied to a 50% retracement, and that was another one that looked, you know, relatively interesting. Now, I've been asked to go over some of those stocks that we looked at last week with the patterns. The first we're going to start with is Twitter. As you can see here, we had the ABCD pattern up there at that 36 and change level. That tells us that we're having a price pattern of around $20 a share in Twitter. If you notice, the ABCD on the upside was nearly perfect, within a half a dollar of the exact high up there at 48 bucks. And now it looks like we're going to drop in half if, in fact, this pattern, you know, continues to work that way. Now, they don't always work, as we know, but when they do, you know, you have to pay relatively close attention to it. If we take a look here at the next one, which is always in the news, this is in the news more than Apple, and that is Tesla. But as you look at the Tesla, you know, we rallied up to that 61% retracement there at 295. We're now trading at around 282 this morning, I understand. But the ABCD structure, there's two of them here. We got a beautiful one from the high where we had the big ABCD up at 386. That one rallied down, came right up to exact 38% retracement at 326. And that brings this D point down to the 1.618 expansion at 225. Let's call it 222 just to give a good handoff to Gartley here. Then you'll also notice that there's another pattern that occurs there from the low on the 20th, and that one also comes in at 222, and that one would be a 3 drive to a bottom pattern. The first bottom being on the 20th, the second bottom being on the 10th of September, and then the last one, which would come on the end of September. So we'll keep an eye on these and run through them, because when you remember, someone's asking a question to take a look at the old Netflix. Let's just get up here and take a quick look at the old flicks and see if we can get it up here for you. I think we should, if I can just find the old, there it is right here. And we'll take a look and see where we are here. Well, Netflix is not really doing very much, but it's still in the zone here of what we're looking at. Let's just pull this up here to take a look at it, and then you'll see we had the big ABCD there, and now it actually held pretty good. It made a 61% retracement back there on the September 4th, and we're trading around 374 today. That means we're breaking out, and that would tell us that we're most probably going to go up to about the 395 level would be my guess, because that's where the ABCD structure would line up here with Netflix. So if that's going to be the case, you know, we need to watch that for sure. That's the way I'm seeing it this morning anyway. So we'll take a quick look at it as we do throughout the time, folks. We've got a major bear market going on here in this bonds and stuff that what I've been talking about for a long time, and now we're starting to see it happen all over the place. You'll see this is the Treasury bond. You notice it should have stopped at that 114.13, at 141.13. Once we went below 141, folks, that was lights out for that. That's not very good. And if you remember, from those of you that get the newsletter, you know, this is one of the things that we've been saying for quite some time, that this is an extremely bearish pattern. If you look at this on the long-term weekly, you're looking at 125 down in here. See, because, you know, we're going to break below the 140 level, folks. You see that there? And all you had during that March to September period, all you had on here was a 382 retracement. And look at the last time you made a 382 retracement, way back in September of last year. And this all comes together down here, you know, around this 126 level. So this means interest rates, you know, really want to go higher. I mean, it's amazing, but that's what it looks like. That does look like we want to see, and you're seeing it all across the spectrum here. And as a matter of fact, if I can get the oh dear, where did I get that? Oh yeah, hold on to the second half to answer Mr. Monley something, and I will put that in, and that's about it. Okay. Let's take a look here. We got another one here that's due today. Now, folks, if you're going to do the coffee trade, you got to use a stop. If you're going to use the corn trade, you got to use a stop. So just keep those in mind. I don't trade coffee, but we'll take a look at the corn. And anyway, I've lived without it lived without the coffee trading for 40 years. I'm certainly not going, you know, to start now. Now, one of the reasons that we expected a little bit of a rally here in the Hang Seng Index and all of the Asian markets was the fact that we had a really nice 61% retracement. We're trading around 27,400 today in the Hang Seng, so we've rallied almost almost 1,000 points in just 4 days. So that's a pretty strong spot. And as we pointed out in the EEM, which is the emerging markets, we were making a, you know, really nice three-bottom pattern in that over the weekend. And as you can see, we've started to have a pretty good rally in that one also. Now, whether that continues on with what we're seeing in the U.S., you know, remains to be seen. But the U.S. has been very, very strong. And we're up again today. So we'll see if it continues higher, which it certainly can, but we'll watch it very, very closely, as we always do. Now, if you're watching the Japanese yen, the one that we brought out earlier this morning, we've already broken about 30 pips down from the high. So whether that's going to be that particular 78% level at 112.45 is going to be it, we'll have to wait and see. We're trading about 112.19 right now, but it's a little early to see if it's going to make that level or not. So we'll keep an eye on it as we go through the day and look at some of these others. We will have Bill Meridian on in the next 5 minutes, so stay tuned. You certainly don't want to miss him, because he's really doing a great job with all the stuff that he brings to our attention. And also, let's get this other one. We have one other one that looks interesting here. If I can just get the chart. This is the one I wanted to show you. This is the stock market from yesterday. This is the E-mini S&P. You notice that the market in the morning pulled right back to a 382 retracement there at 28.97. Went up and actually made a new high from September the 14th by about 10 cents. And that was pretty much, what we're looking at. Anyway, we'll have Bill on very, very shortly, and that'll be a lot of fun to listen to what he has to say. Now, we're trading right around 29.11 right now. Any move above 29.19 says that we're probably going to go a whole lot higher. So just see what happens. 877-927-6648. Stay tuned for Bill Meridian.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Bill Meridian of Cycles Research, Vienna, Austria, on the line. Bill, are you there?
Yes. Hello, Larry.
How are you, my friend?
Okay, fine.
You want to go ahead and get started?
Sure. You have the presentation that I...
Yes, I've got the first,
Okay.
I've got the Larry show, and now what we're looking at, of course, is the things that you want to cover roughly. Would you just rather go to the first chart, or you want to just give us a review, or
Well,
what
just
would you like to do?
today's perspective, stocks, I think we're in a shallow correction, which is almost complete. Bonds, bearish, that should be bearish. Bearish week dead ahead, which we'll get to. Gold, I think, is likely nearly a low sometime at the end of the month. Then we might say something about 2019. I'm not sure whether we got that far last time or not. But if we go to the first chart, that is the monthly S&P cycle, and it shows a bit of a dip or a bit of a low, you know, exactly where we are now. But by the end of the month, it shows a rise resuming. And to zoom in on this a bit, we go to the weekly S&P, which showed a high, which shows a high right now. And of course, seasonally, this is the weakest week in the weakest month. And especially in the last 30 years, this week has been down. I wrote an article about this for Forbes, I think it was on Friday. So seasonally, the annual cycle points down. The other cycles only point down for part of this time period, as you can see. So I think the correction is by the end of this month, we're out of this August, September, what is usually a corrective phase, which thus far has not been that corrective for the overall indices, but has been somewhat bearish. August was a very bad month for the energy stocks. Thus far, the financial sector is not doing well. Technology has been hit a bit. And in the technology area now, the last time we spoke, I expressed doubts about Netflix and Facebook. And I think that is the right way to look at it. Because the economy is recovering, people are going out and eating in restaurants more. And I have a friend who in North Carolina makes Hand, H-A-A-N-D, hand.com. They make glassware that's guaranteed not to chip for 3 years. And they just had to move to a manufacturing facility that's 3 times the size of their original one because so many people are eating out and because their stuff's guaranteed not to chip. So as that trend accelerates, another trend suffers, and that is less people are spending time at home. If you look at the stock Electronic Arts, EA, that looks rather toppish to me. And Facebook is already broken down, and I think Netflix's last earnings disappointment in July is the beginning of a series of earnings disappointments. So Amazon is not too affected by this. Apple's not too affected. Google looks somewhere in between. You know, Apple, Amazon appear to be the 2 strongest. Google is number 3, and I wouldn't own Facebook. And as I said, any company whose business depends upon you staying at home is probably going to suffer for the next couple of years. I think it's just beginning. So,
Bill, what about the you know, these social media stocks that are in the news? You know, as far as you know, the handling the news and how they manage the news themselves. Anything astrological that gives us a clue that whether this is just beginning or what's going to be happening with that? Do you have an idea?
well, you know, what the astrology aside, you know, when the internet started and people were very excited, and I said, well, it's like any other industry. Eventually, governments are going to figure out how to control it, how to regulate it, how to tax it, and it's going to go the way of all other industries. And I think that's what's happening, and you're seeing the tussle over that right now. And one of the reasons I don't like Facebook is its foundation was based on deception, because Zuckerberg got the idea from the Winklevoss brothers, and he is not handling it very well, I don't think. At least he's putting a jacket and tie on now. But I think they're in danger of getting regulated if they don't. They have too much power, and I think governments are looking at this. And I don't think it's going to matter whether it's a Republican or a Democratic administration, and people don't like having their information mishandled. And I think Facebook has handled it all wrong. And I take this breakdown in the stock. On managed accounts, I have lightened up Facebook, cutting holdings by 25%, and I'm thinking of cutting it more. And Netflix would cut back a bit. But anyway, the next graph, the bull market is still intact, because if you look at breadth, the advanced decline line is still going up. And as long as that's going up, you're in a bull market. And if you go to the next one, that's the 10-day moving average of breadth. And you'll notice it is oversold. And it has been a very good indicator of those tops you see in there. 5 of the last 6 peaks have led to short-term corrections in the market, so it's a very good way to follow the market. Of course, the AD line goes up most of the time, so you've got to put it on this type of a basis.
Mm-hmm. Okay.
Would you like to move on to bonds?
I certainly am. I'm getting to the weekly note cycle. That's the next one, correct?
Well, you notice the peak that's today.
Mm-hmm.
That is in the weekly note cycle. Now, let me just show you. Now, remember, this is a dynamic cycle. This cycle, in a few weeks, in other words, it always changes. I guarantee you that is the cycle as of the closes of yesterday. What it's going to, does it have any, it's running about 80% accurate right now, but it can get out of phase and then has to be rerun. Now, the next cycle you see, that is what I call a static cycle. That is the action of the T-notes in September from 1982 to the present. The top chart is the expected return. In other words, it is the percentage of times that market is up multiplied by the price change. So it's expected return. It is price times the percentage probability of it going up.
And it's making a new low as we speak.
And you can see the 17th through the 22nd. This I wrote up in Barron's, I think it was over the weekend. And I presented this very graph. This is the single weakest time of the year. So you've got the dynamic cycle peaking on the 19th, and you've got this cycle peaking on the 17th. And so you've got a very high probability of lower notes into the 22nd, which means for the rest of the week. And so let's use the microscope approach. We go to the next page.
Okay.
September 19th, that is the percentage of September 19th that have been up since 1982, 63.5. But the net change has been about a loss of 0.026%. But look at the 20th, look at the 21st, and especially the 22nd. The 22nd has only been up 25% of the time. And look at the percentage change. That's 51 basis points. So this is one of these bearish air pockets that opens up during the year. And this is how I got into this type of work. In fact, I'm going to see my friends on Friday, Seasonax, season with an AX, seasonax.com. I met them 4 years ago, and they've got this running, I think for all markets, you can take a subscription. And here comes an ad.
Yes, sir. We'll be right back. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Bill Meridian out of Bill. Let's talk about this last chart here that we're looking at, which is the one with the pretty colors. I believe it's referred to as the usually strong in October. Is that the one that?
Oh yeah, we finished, I guess, just 19th to the 22nd. That's the single most bearish time of the year. For bonds, we don't know why, but we tried to confirm it. So the previous slide is the dynamic cycle. In other words, it's every other cycle that's active right now. It also points down. So you've got everything pointing down right here. So you must have about an 85% probability of a down bond market into September 22nd. But in the next one, this is a histogram of each month. And you see Jan 35, that means 35 Januaries, or it goes back 35 years. And so you'll notice that we have September is sort of blah, and October is one of the 4 stronger months of the year. So I would say by the end of the month that bonds will be a buy for October.
Okay. Want to switch over to the gold market now?
Yeah. Well, again, this is a dynamic cycle, and let me stop and just say this is very tough because August and September are two of the strongest months, or the 2 strongest months in the gold market going back to '69. And the expected return in September is the highest of the year. So in other words, the expected return for the month of September is the single most bullish. And unless gold, if it rallied a few bucks today, then it's positive this year for the month. But as you know, Larry, it was down in August, which is usually a strong month, up 60% of the time. And thus far, as was the close yesterday, it was down in September. And my contention is this gold weekly cycle, that is not the weekly cycle. I think that is the monthly. And I think I put the wrong one in there. I was rushing to finish this, but the weekly or monthly cycle, I'm going to guess that's monthly, is bottoming in the first week of October.
I believe it's a weekly, Bill, because it only goes back to 2015, so it's got to be a weekly.
I'm not too sure of that, but anyway,
okay.
That is you'll notice it's going down all through August and all through September. So I was faced with the question back in July. I was looking at that and saying to myself, gee, we have 2 of the best months of the year coming up. The static cycles are pointing up, and the dynamic cycle is pointing down. And in my experience, the dynamic cycle usually wins out, which has certainly been the case thus far, but you are coming into a low. And so, and I could cite all sorts of, to give you an example, sentiment figures are now at a 26-year low. And that is, I just confirmed, that is the monthly cycle, Larry. I'm sorry, I've got the heading wrong.
It is okay. Okay.
Yeah. And I just wanted to be sure of that, so I just checked it. So thus far, this cycle has been right. It has depressed gold and prevented the static cycles from rising. Now, if gold is down in the month of, if it's up in the month of September, it's got a higher probability of being down in October. And if gold is down in September, it has a higher probability of being up in October. And what does this cycle say? It says it should bottom in the first week. So you're starting to get the first solid signals of some sort of a reasonable gold rally coming up, which should begin, maybe it's begun already, it's displaced forward a little bit, but late September, early October, I would say by the first week in October, we should have some reasonable low. And as you know, if you look at the technical indicators, they're beaten down about as much as they can get beaten down. I mentioned the sentiment numbers. So I still think it's in a bear market overall, but we should get some sort of a reasonable rally, which should make gold bulls happy.
Okay, now the next one's really interesting because you're talking about equity bubbles. This is something that we haven't seen before. This is a very interesting chart from my perspective. I like to see this. Can you explain to us what you're looking at here, Bill?
Sure. Well, we're looking at previous bubbles. And of course, as you and I know, Larry, a lot of the theory upon which we act is that people are going to behave the same way in a bull market or a bear market, whether it's commodities, tulip bulb, stocks, bonds, real estate, and the price graphs more or less look the same. So here you have the gold bull market of the 70s, the Nikkei in the 80s, Thailand in the 90s, tech in the 90s, U.S. housing, China, biotech, and right now you've got the e-commerce, and they've taken the leading asset class and they have just plotted them all, the leading asset class in each prior bubble, showing you the magnitude of this one as compared to the earlier ones. And the reason I put this in there is because I've mentioned this many times, but I got to repeat it. I don't think a lot of the younger people realize this, but inflation, in other words, the addition to liquidity injected into the system by the central bank, is key. And people seem to think it's, that they know what they're doing, that it's, very reasonable. In other words, if industrial production goes up 2%, then they increase the money supply 2%. Well, back in the 80s, this fellow said we were injecting more and more money into the system, and we didn't see any increase at the CPI level, so we figured there was no inflation. We'll stop right there. The definition of inflation is an excess increase in the money supply straight from the Austrian school that may or may not result in rising prices. It may result in rising prices in gold and real estate, but not necessarily the components of the CPI. The guy who made the comment was the head of the Bank of Japan in the late 80s. And if he didn't know it, how would you expect most people to know this? Which is why I study the Austrian School of Economics. So what happens is you inject all this money into the system. It's got to go somewhere, and those are called Cantillon effects, named after Richard Cantillon, the Scottish economist. And I tell people at graduate schools when I go, and I'm going again, I think next week, to the university here in Vienna, and I said, if you can figure out where that money's going to go, then you've got a leg up and where the next bull market is going to be. It could be in art, it could be here or there. And now it's getting more scholarly attention. And I read a paper that said, for example, let's just say we had 20 asset classes only, and they inject a huge amount of money into the system, and 7 of those asset classes take off. And as you move forward, one asset class starts to falter, and actually you have a bit of a depression or a panic, and then another one starts to go, and as it starts to fragment, it's like stocks. If you start to have dispersion, not all the stocks are going up together, you start to get divergences. Well, let me point out that the art market, every time you've had me on the show, I think I've mentioned this, I think peaked out and ran into trouble now, was it 2 or 3 years ago, or started running into trouble. The bond market peaked a year and a half ago. And now they're saying that housing prices are coming down in London and someplace else. I just saw it last night, but I can't remember where it was. I think Hong Kong?
No, that's still up.
Okay, well, it's London and somewhere else, but it's just the faintest beginnings.
New York for sure.
Oh, New York. Okay, that's where it is then. I don't follow real estate that closely. But as you start to see these asset classes that have benefited from this huge influx, I mean, look at the buildings. They're the same. They didn't change. It's the value of each Federal Reserve note lessening, declining in value. So you're starting to see this fragment, and that's the reason I put this up there.
Listen, let's pay a few bills, and you come back and
sure.
we'll talk a little bit about Mr. Trump. How
Finish
about
up
that?
on the bubbles, yeah.
But thank you very much.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Bill Meridian, Cycles Research. Bill, do you want to, what would you like to go on with, the bubbles, or would you move on to the Trump stuff?
Well, let me just say that according to all my work, I expect this bubble to burst in 2020. And the one area that just keeps going higher is U.S. stocks. I mean, if you look internationally, the other stock markets can't keep up with this. The bond market, I think, is already down. The gold market is in some degree of trouble. So my only question is, can we get through 2019? Mm-hmm. At this point, I'm sticking with that. I think we can, but 2020 to 2022, according to my work, is the next deflationary episode, like 80-82. It's not the end of the world. It'll be like 80-82. It won't be as bad as 07-08. Mm-hmm. So that's what I have to say about bubbles. And now, if you
get on to the next one, we've only got a few minutes or so here, so you could tell us a little bit about the president. That would be good.
Well, let's put it this way. If they didn't get him already, they're not going to get him now, because in March, his progressed Sun equals Jupiter, and he's got progressed Venus and progressed Jupiter tying up together. That's in March. His horoscope is very well aspected. Progressions begin to have an effect months in advance, and here we are. So from here, it's like buying a stock that's going to peak out in March, but his chart looks very well aspected for next year. And I doubt very much, I mean, he's going to have Jupiter opposite his sun, Jupiter hitting his Uranus by transit. I'm just looking at two of the progressions. The only thing that's really difficult here is these two eclipses. One coming up in January is opposite the U.S. sun, and the other one coming up in July is conjunct the U.S. sun, and the sun in the national horoscope is the leader. So it looks like they're going to keep trying to knock him off balance, but, you know, if anything dire were going to happen, and again, as I said last time, I looked at the horoscopes of Johnson, Nixon, and Clinton, who the three presidents who were impeached, and in no way does Trump's chart look that bad.
Great. Hey, Bill, thank you very much. Really interesting. Really appreciate it, my friend.
Please buy my book, Mastering Geopolitical Prediction.
We'll post it on the site. Thank you, buddy. We'll talk to you soon.
Bye-bye. Yep.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.